So I'm here today with David Johnston from Property Planning Australia. Thanks for joining me.
My pleasure, Mike. Good to be with you.
It's a lovely Melbourne day today, which is a pretty rare thing. I love to give people a stick when I'm in Melbourne. They somehow invite me back. I want to talk to you about mortgage strategy.
Fantastic.
Right? So property investors, I think, know to some degree that when they purchase 3 or 4 properties, they get to the point where the portfolio is growing. There are issues with using the one bank or using multiple banks. What does mortgage strategy exactly mean? What influence do you exert as a mortgage strategy expert for your clients?
I'd like to think we exert significant influence. So we basically have broken down mortgage strategies into 5 core areas.
Yep.
Now within those 5 core areas, there are literally hundreds of mortgage strategies.
Yep.
And what we help people to understand is, look, there's always a great rate out there.
Mm-hmm.
You know, everyone has access to a great interest rate.
Yep.
And you don't need to be an expert in mortgages to know 4.25 is higher than 4%.
See, that's what I think traditionally investors think brokers are for. Just get me the best rate.
Yeah.
Right? That's demeaning perhaps your whole industry. We're about to find out whether that's true.
That's spot on. That is. But you know, a lot of the industry, the whole industry has been built to actually focus on selling rates.
Yeah.
So that is what people want. That's what they've been trained to come in to see people for. So that's what most of the industry give them,
Yep.
rates and products. But it's actually the mortgage strategy that sets things apart. And that's, I like to say, you know, your interest rate will save you money, but your mortgage strategy will help you create wealth.
Right.
Okay, so the 5 core strategies that we have, and I've written an article on this, the 5 core strategies to help you grow your wealth with Domain.
Good.
And so they are money management, how to hold property as you accumulate property, which is really a fundamental one.
Yep.
How to optimise your tax deductions, which is, you know, obviously extremely important.
Yep.
As well. How to manage your risk.
Mm-hmm.
I mean, your mortgage is your largest debt in your life, and it's connected to where you save your money.
Yeah.
So it makes sense to look at ways you can manage your risk.
Of course.
Through your mortgage. And then the final one, which is, I like to call it the grease of the wheels of your mortgage strategy, and that's offset optimisation.
Right.
Okay, because the offset accounts basically weave through the rest of the strategies.
Yep.
We're fortunate enough to be one of the only countries in the world that has these offset accounts where every dollar in your savings account 100% reduces the interest on your loans. And being able to have these this separation of money that is reducing your interest payable but not actually paying down your debt is such a large catalyst for you to be able to set up for future deductions on existing property, to be able to hold property that might be a home but then you'd like it to become an investment property, or vice versa. So without getting into too technical detail, you know, the way you set up your mortgage strategy from the moment you buy, because you can only borrow to purchase an asset once.
Yes.
And so you can only ever claim interest on the amount you borrowed at the start.
Yep.
Okay, so...
Yeah, the ATO is chasing people who have tried otherwise. That's been on their hit list.
That's right. I'm talking to the man who's an absolute expert on on tax. So you know all about this, and a lot of people don't understand the purpose test.
Mm-hmm.
And think they can then pay down debt and access redraw, and as long as it's secured against the same property, they can claim it.
Tax deductible Ferrari.
Yeah, that's right. So, you know, they're the 5 high-level mortgage strategies, and without going into all the technical elements,
Yep.
it actually is quite technical, and a lot of the benefits might only come to fruition 5 years down the track, 15 years down the track, but it can mean that you've got greater tax deductions over your lifetime for 30 years. So they're actually not measurable benefits today.
Yeah.
It can mean you're able to hold this property and that property, which can add another $1 or $2 million to your financial position at retirement.
Yeah.
So mortgage strategy, I think, is probably the most misunderstood financial discipline.
Yeah.
And yeah, it can make a huge difference to your wealth.
So it's not just about the rate, And we might link that domain article that will go into a bit more detail, because I'm sure we could talk all day about that. But check that out. We'll link that below. But thanks for joining me today.
Always a pleasure, Mike.
Cheers.
Cheers.